Date with the latest business, economic and market reports from the world's financial centres in World Business Report. BlackBerry may confirm it lost $1 billion in the last 3 months as fears grow about the company's survival. Plus, is Britain cheating at games? Brussels and London square off over tax breaks to the computer entertainment industry. A very warm welcome to you. This is World Business Report with me, Alice Baxter. Also coming up for you in the programme, is Argentina cooking the books? The IMF threatens sanctions over the accuracy or otherwise of the country's economic data. But first this hour, is it finally the end of the road for the BlackBerry? Well, earlier this week, the struggling smartphone maker announced its biggest shareholder had actually thrown it a lifeline with a $4.7 billion takeover offer. But there are now fears that the deal won't go through, or even if it does, that BlackBerry's days as a phone maker are now numbered. Well, BlackBerry releases results for the last quarter in just a few hours from now. It's already warned that losses could be almost $1 billion for the 3 months to the end of August. Perhaps even more worrying, though, this week some of its business partners have begun to desert it. Marika Oye reports.
This was to be the savior of the company. The BlackBerry 10 was launched at the beginning of this year to much fanfare. But piles of unsold smartphones have resulted in a hefty loss of almost $1 billion this quarter. After announcing another round of hefty job cuts, at least it's managed to find a possible buyer. A consortium led by its largest shareholder, Fairfax Financial, is offering $9 a share. But investors seem skeptical, with BlackBerry's shares falling below the offer price. This week, its business partners have begun to desert it. T-Mobile says it will no longer stock BlackBerry handsets, while one of its component suppliers warns it may soon end their relationship. BlackBerry has a collection of valuable patents that's attractive to its buyer. So there's a risk BlackBerry may just be stripped of its assets and the iconic handsets could disappear from stores forever. Marika Oye, BBC News, New York.
Well, just a little earlier, I spoke to Chris Green, the Principal Technology Analyst at DMG Europe, and I asked him whether this is the end for BlackBerry.
It's really not looking good. I'd almost go as far as saying it's doomed. It's a really, really difficult time for the company with massive mounting losses, diminishing market share, and most recently the announcement that some major customers and resellers in the form of mobile phone networks are dropping the platform. It's very, very difficult to see a way forward for the company now.
Let's talk about this lifeline that was thrown it last week. Its biggest shareholder, Fairfax Financial, announcing that it was going to lead this consortium and offer to buy the group. Is that good news?
It's good news for shareholders. It looks like there's an opportunity to return some value to them while there's still some asset value left in the business. But whether Fairfax are going to have any long-term interest in trying to run the company or rehabilitate it remains to be seen. It still looks far too much like an asset stripping exercise. They're looking at being able to leverage the patent base that the company has, and it does have some lucrative patents, and maybe hive off the smartphone manufacturing side of the business, or even shut it down and license the software off to other people.
OK, let's cross to Argentina now, because the country's been battling hard to win back the confidence of investors ever since its catastrophic debt default in 2001. Well, not helping the cause, the suspicion that it's falsifying its economic data. For example, is the rate of inflation 10%, as the government claims, or as some private economists believe, closer to 30%. Well, the IMF has given Argentina until Sunday to address these concerns or face serious consequences. Well, with me now is Professor Francesco Caselli from the Centre for Economic Performance at the LSE. Many thanks for joining me here on the show. This is uncharted territory that the IMF is entering into, isn't it, when it comes to Argentina? The threat of expulsion from the fund. How serious are these accusations being levied against Argentina?
Well, the accusations are very serious, and I think The fact that Argentina is lying on its inflation statistics is more than a suspicion. It's something that is quite evident to anyone who has looked at the data and, quite frankly, just lived in the country. There is a concerted efforts by economists to try to get around the falsification of the data by the government by looking directly at prices in supermarkets and other outlets. And systematically, the numbers that come up are 3 to 4 times larger than the government ones.
Which is huge. And this alleged distortion of the inflation numbers has a direct impact, doesn't it, on people's mortgage repayments inside Argentina, on bondholder returns, etc.?
Yes, this is in part an exercise in expropriation. The government has issued, for example, some government bonds whose value is linked to the value of inflation. So if inflation is 10%, the value of the bond goes up by 10%. If inflation is 20%, the value of the bond goes up by 20%. So clearly the government has an incentive to understate the inflation rate to pay less the bondholders and effectively expropriating them in terms of the real purchasing power of these bonds. So that's one reason why the government is trying to do this and has been trying to do this. The other is just that they were pursuing policies that led to high inflation, printing lots of money to pay for government spending, and that clearly pushed inflation up, and they wanted to hide that.
And what has been the response of the Argentinian government and its president, Cristina Fernández de Kirchner, to these accusations by the IMF?
Well, of course, they've been denying them very vociferously. What else can they do? I think now they are beginning to understand that this policy has backfired because they have lost confidence by foreign investors, lost confidence by other governments, lost the confidence of their own citizens. And also the policy is having very negative effects on the economy because in an economy where you don't know what the real inflation rate is, there are all sorts of decisions you don't take, like investment or taking a mortgage and so on.
So it's now facing the threat of expulsion from the IMF. It's facing the threat of sanctions from the IMF. There's 2 years left for the current president to serve out her term. Are we going to see a change of policy from Argentina, do you think?
Yeah, I think they'll drag it as long as they can. And it's possible that she'll try to serve out the rest of the term by trying to prolong these negotiations with the IMF. They also have other things at stake. They have a very important judicial dispute with the holders of bonds from the time of the default who have not accepted the bond exchange at the time of the default. And I think part of the reason why they are trying to appear somewhat more open to discussing the index now is because they want to keep the IMF and the US on side in this judicial dispute.
Because, of course, for many people out there, the memories of that 2001 default still really fresh in people's minds.
Yes, I mean, I think another default by Argentina would be catastrophic.
OK. Professor Francesco Caselli, many thanks for coming in and speaking to us on this. Well, do stay with us because we've got a little bit more now from the world of technology and a row that's brewing between Brussels and the UK over the multi-billion-dollar computer games industry. The European Commission is investigating a British tax relief scheme for games companies. It's worried that it gives the UK industry an unfair advantage over the rest of Europe. Well, I was actually lucky enough to go down to the UK's biggest international video game show to try out what was on offer, but also to try and find out what all the fuss is about. So here I am at Eurogamer Expo 2013, every teenage boy's fantasy, I would imagine, because it's a chance for gaming lovers from all over the UK to come to London to try out the newest and the best video games like this Lego Marvel game developed here in the UK for the very first time and just in time for Christmas. And with 33 million people playing video games in the UK, it's a serious business. Big names are designed and produced here. But gaming insiders and government alike worry that the chances of replicating future such successes are being jeopardised, largely thanks to a row brewing between the UK and Europe over whether to allow tax breaks for the gaming industry here. The European Commission says such concessions could distort competition. A decision is imminent.
I don't want to speculate on what the Commission's decision will be, but as I say, I think we've put forward a very strong case. we are very committed in Britain to having it because we believe that games are an important cultural product. We believe they need support just as film gets support, just as TV gets support, animation gets support. Digital screen industries now need that kind of support in order to maintain these very important cultural programs.
Those inside the industry believe the tax breaks are essential and reflect its increasing cultural importance.
I think the games industry is largely misunderstood. It's the largest entertainment industry in this world, and film has always had support, and more recently high-end TV and animation. But there seems to be some misunderstanding about what is the cultural value of games. Clearly you can see the cultural impact of a show like this. You see people in public transport playing games on their smartphone devices, everyone's playing games on Facebook. It really is mass market entertainment, and therefore I'd say quite clearly it has cultural context and relevance. But we have to prove that to the EC.
So for those who can tear themselves away from their computer screens, it's all eyes on Brussels. Alice Baxter, BBC News, London. I think I was just starting to get the hang of that game towards the end, actually. Great fun. OK, quick look to see how markets are getting on this hour, if we can. That's the view in Asia at the close. Tokyo stocks are closing down 0.26% there as investors gearing up for a string of Japanese data next week and a government decision on hiking the nation's sales tax. The Hang Seng in Hong Kong bucking that trend to close up 0.81%. And in Singapore as well, the index up 0.69% as well. That's the view across Asia, of course, waiting for Europe to open up in just a few moments. From me and the business team, bye for now.